Hello, my name is Rob Smith, and I'm part of the Grove, and I am welcoming you to a webinar that I'm super excited about. We're going to learn a lot about the stuff that we may not want to learn about, but we should need to know because it's going to be more and more valuable, or more and more in our faces in upcoming months and years. So, Peter, I'm going to just kind of hand it off to you and let you basically tell us all about the income tax, sales tax, the whole, basically just Nexus. So, Peter, take it away.
Okay, thank you, Rob Smith. Very nice to be here with you all. Rob and I have been talking actually for quite some time about this world of providing valuable information to accountants and to people in the financial services world. And he and I really stuck on this particular topic of multi-state tax. And I'll explain to you why once we get started. Let me go ahead and share my screen because I do have slide deck. So let me go ahead and share that. Can everyone see my screen?
Yep.
See it? Okay, excellent. Okay, so, all right. Okay, so the topic of this is it's titled Building a Multi-State Advisory Practice. Building a multi-state advisory practice. And then the subtitle, Guiding Your Customers to a Better Awareness of Commerce Today. So that's key too. The subtitle is huge because commerce has shifted a lot. When I think about commerce, right, it's basically the buying and selling of goods and services throughout the US and throughout the globe. And it's shifted primarily because of the internet. Everyone knows that. Everyone buys online. Everybody buys from their phone. Everybody has changed their shopping habits, right? And so the world of tax also has had to catch up to that, right? It's had to catch up to that. So I'm going to be talking about building a multi-state advisory practice for you all because I believe it's very important, and I believe we're not even at first base yet. I believe we're just getting started in a new era of states themselves, all 50 states, becoming very aggressive at their share of the revenue pie. You know, even that one statement, their share of the revenue pie, it says a lot to you. The states view tax, income tax or sales tax, use tax, different types of tax, they view it as revenue, right? That's their revenue. They don't consider it a fee or a tax. It's how they generate the revenue in order to maintain their state, in order to keep up the roads and the streets and pay for all their people and things like that. It's not too hard to figure out that across the country, across the entire country, the states are struggling because the demands upon the state are higher and higher. And the citizens do not want their taxes to go up. So they vote for politicians who will not raise taxes, but the costs continue to rise. So how are the states going to be able to capture the quote unquote revenues that they need? Big question, big question. And it really should be guiding the thought process of financial people and business people all over the world. Because it's critical that we understand how am I as a business owner going to direct my efforts both to conform to policy, meaning regulations and laws, as well as becoming more strategic about how I do these things so I can understand as I go into this new market or as I begin selling to these new customers, how is it going to affect not just my gross margin, but my operating margin too, which includes tax. So I want to make sure that you all get an opportunity to ask any questions or raise any comments. This is going to be a pretty technical session because tax is technical. You know, accountants are rule-based people. We follow rules. And it's basically table stakes as an accountant to ensure that their business customers are aware of, understand, and adhere to the rules. Rules are regulations, income tax, financial accounting regulations, reporting rules, payroll rules, the entire world of rules. We as accountants, our responsibility is to understand how these rules are promulgated and the administration of those rules, how they impact upon businesses. We have a duty to provide information, to provide guidance so that our business customers understand. So that's enough for this first slide. Let's go to the next one. Okay, so this is just a little bit about me. I'm a proud USF Don, San Francisco, studied politics and economics. When I was a young person, I really wanted to get into the world of politics, but I also wanted to understand money and how finance drove the economy, meaning how people invest money, how people save money, how people borrow money, and how does it impact upon their own situation, their own families, their own financial needs and requirements and things like that. A little bit more, MBA from UC Irvine, studied finance, California CPA, long since inactive because I don't perform any attest services, right? I don't do any audits or anything like that, but I do maintain my CPE for California Taxpayer Education Council. All the states, by the way, now require anybody who prepares a minimum amount. In the state of California, it's 11 tax returns. If you prepare more than 11 tax returns in the state of California, you're obligated to be certified by California Taxpayer Education Council, and you have to maintain that year by year. Also, I'm a member of the Institute of Management Accountants. This is a corollary to the AICPA, which I'm also a member of, but I've been a chapter leader for the IMA here in Orange County, and I'm a proud IMA member. And finally, as far as work experience goes, my career started working for Deloitte. I went on from Deloitte to Arthur Andersen, and so I was in public accounting, doing audits and tax for 11 years. I audited private companies, public companies, and I learned to love how to read, interpret, and analyze financial statements. I just love doing that stuff. And then finally, a few years ago, when my wife wanted to retire, she said, Peter, I know you love consulting and you love doing all this stuff for business customers, but I need you to get an RJ. Anyone know what that is? I didn't know at the time. I said, Sue, what's an RJ? She said, it's a real job. So I had to go get an RJ. And for the last 5 years, I've been working as a CFO for a technology company. The company is called Macnica. We're a global semiconductor distribution company. And this is really how I got into really in the deep weeds of multi-state tax. Because, when I first started working for this company, I learned that they were filing sales and use tax in 8 states. But then when I asked them to tell me how many states are we selling into, meaning are we shipping products into, it was over 25 states. This was at the time of before Wayfair, which I'm going to get into. But I started immediately recognizing, hey, maybe we have an obligation to register in these other states. If we're only filing in 8 states and we're selling into 25 states, maybe there's a gap there. And that's something for you to consider too. All right, so we're going to get right into the technical aspects. Again, please ask any questions and we'll cover those. Rob can ping me and we can talk about it. But it's important to understand these laws, these Supreme Court cases. First Quill, and then Wayfair. So Quill was a case that was decided back in 92, 30 years ago. You can see it from my points there, but the main aspect that I want you to understand about Quill is that Quill established this standard of nexus, meaning physical nexus. And the point there was these three pillars. So if you had payroll, meaning employees, real estate, meaning office space or leased or owned office space, or you had people traveling to on-site premises for customers to perform training or to perform implementation or to perform delivery services. If you physically went into the state, then that qualified under Quill as establishing obligation to register and begin remitting sales and use tax in that state. So that was the law for many years. But then everybody knows with the internet, probably many people that you know, maybe you yourself have purchased items from Wayfair. It's a huge global company, and you can buy just about anything from them, mainly home goods and household goods and furniture and things like that. Anyway, in 2018, the state of South Dakota, they sued Wayfair, and the case made it all the way to the Supreme Court. It ultimately was decided on a 5-4 vote. And it changed the standard from physical to economic. You see that in my first bullet point, sub-bullet point. The physical nexus went away. No longer mattered whether or not you had people that, whether or not you had employees in the state or you had office space in the state. Economic nexus it's basically a synonym for the internet, for the web, meaning if you have commerce in that state, then that allows the state, this was the ruling in that decision, allows the state to determine their own what I call bright line, which basically means if your revenues, and I'll get into those, if your revenues in that state exceed the dollar amount determined by the state, then you have nexus in that state and you're required to report sales tax. Use tax is something that also is adopted on a state-by-state basis, and everyone knows what use tax is. Use tax basically is if you didn't pay sales tax on something and you use it, the state wants for certain goods and services, the state wants you to pay use tax. And generally speaking, they have you capture that on your annual state income tax return. So this is key, right? Wayfair is key, and it also signifies a big change in the way the states operate. Because now the states are saying, okay, on the sales tax basis, I'm able to collect the money from sales made into my state, whether or not the seller, the reseller, had any other business relationship with the state. If you sell something in that state and it meets the standard for goods and services that are taxable, then we're going to have to begin the process of registering and filing and remitting tax. This is the question I asked the accountants that I was working with when I started working for Macnica. I said, hey, what I see we're filing in 8 states. What about the other states? What are we doing about the other states? And are we going to be visited by the state of Texas or the state of Ohio or the state of Illinois or the state of Pennsylvania or the state of New York or the state of Florida? Are they going to come in and say, hey, we want information about your company and sales into our state? It's a huge shift in the economy. And it's going on now, whether you've seen it or not. Let's go to the next slide. Any questions here?
No, I think we're doing pretty good so far.
Okay, thank you, Rob. So this is a key point here. Read the top part. The founding fathers, they created a very unique constitution. We have a federal society. It's called federalism. And what federalism means is that we have a union of states, but each state has their own rights. Each state has their own rights, and they get to develop their own statutes and regulations, and it forms this union. So what does it mean for business customers? What does it mean for anybody? It means that if you're doing business in their state, you have to understand how their state laws might impact upon you. It's a huge issue. You know, when I began preparing multi-state income tax returns, and when I began apportioning revenues to different states, and I thought to myself, oh, this is going to be easy. All I have to do is apportion the revenue by ship to location, meaning where the product is actually delivered. And then I can go ahead and take those numbers and report them on the various state tax returns. I thought it was going to be easy, but it's not easy because different states have different regulations with respect to what's deductible in their state and what's not. It's the most, it's something that on the one hand, I love it because we live in this crazy country where there's all these different rules and regulations. But on the other hand, I hate it because it means there's so much to know. There's so much to know. Since 2018, 4 years ago, 45 states, and now parts of Alaska and DC, they each have their own wayfare laws, meaning their own regulations that they compel upon businesses that establish their own bright line determination of what constitutes nexus in their state. It's crazy, but it's the way things are now. And then, of course, point 2 says, yes, some of it is based upon the revenues into their state, based upon the ship to, not where we're billing the customer, the ship to. Others are based upon numbers of transactions, and some are hybrids, meaning if you hit this or this number of transactions or that number of revenue, then you will be subject to compliance. And also, everybody buys from places like Amazon and other fulfillment houses, meaning these marketplaces that combine different types of markets in one platform. Amazon is one there. Amazon allows a seller to delegate the responsibility of fulfillment of the orders to Amazon, called FBA, Fulfillment by Amazon. When you register with Amazon as a reseller, they will have you, they will tell you, okay, here's how we're going to handle it. When you ship products into these various states, we're going to go ahead and calculate and charge you for the sales tax. You can decide whether or not you want to pass that on to your customer. And in my experience, working with these states and understanding the compliance aspect, once you begin to file sales and use tax in the states, if you're new to that state, they then begin tracking your history. They then begin comparing your revenues to other compliance aspects in their states. Meaning, like for instance, in the state of California, which is where I live, once you begin filing sales and use tax in the state of California, then they also send you a questionnaire that asks you, hey, you've already met the threshold for sales and use tax. You're about to meet the threshold for filing income tax in our state. In the state of California, it's about $600,000. Once you hit $600,000 in revenues in the state of California, if you're a Delaware corporation, they want you to begin to report your income tax as an out-of-state corporation. It's amazing, but this is what's going on now.
Yeah, Peter, that point right there, I think that one is the one that scares me the most, because once you open up that can of worms, it seems like you never know where the ball's going to lead. And
Yeah.
Without knowing that and kind of figuring out what you're getting yourself into, whenever I've been involved in the situation or seen it, that's really made me nervous, because it's like a domino. You never know where it's going to end.
There's no question that the states are looking at this and saying, okay, sales tax is something you pass on to the consumer. The state doesn't always get to benefit as much from that. But they also look at the business and say, you are receiving a benefit, you the business owner, and we want to tax the income, which is my point earlier about multi-state income tax. It's something that the most aggressive states, and I'll tell you who they are. It's definitely California. California is amazing for things like that. And they're going after so many companies now. Ohio is also very aggressive. Illinois, very aggressive. Pennsylvania, very aggressive. New York, very aggressive. Florida, also aggressive. and there are others too. Pretty soon, when these states start talking to each other, they will find out that there's opportunities for them too, and they will begin to mimic the behavior of the states who have already gone forward. There's a saying that we have in the state of California that says, whenever something new happens, it happens first in California. Californians tend to be very progressive about laws, which means they think that business owners have a lot of money and we're going to go after them. So that's something and I've definitely witnessed that working with the franchise tax board here in California. Finally, on this slide, there's something here called Federal Law PL 86272. Please look it up. If you want copies of these slides, I can send them to you. PL 86272 has the ability to mitigate the impact of Wayfair, which allows federal law to define which activities, meaning if you think about your business relationship with the state, do you send a catalog into that state? Do you send mail order into that state? Do you attend trade shows in that state? Do you work with distribution companies who might be in that state? It's amazing the amount of potential exposure here that's going on. So please look up PL 86272, because it might save you and your clients. I was working with a Texas company, mail order Texas company, who had about $100 million in revenue, and they had already done all of their work on the sales and use tax side. But California came after them and said, you were way more. I think they had close to $25 million in revenue in the state of California, way in excess of the 600,000. And California wanted them to report that revenue and the associated state income tax for the corporation. So we had to battle with the state of California, because this company never set foot in the state of California. They didn't attend trade shows in the state of California. The only thing that they did is if a California consumer contacted them, they would send them an email with information about a product. That's all that's the entire extent of their relationship with California. So we were able to exempt ourselves from income tax on the California side because our business relationship with the state of California was not that great. However, there's only 16 states that currently say that even though it's a federal law, only 16 states currently say we adhere to all aspects of 86-272.
Yeah,
Okay,
I put a pretty good link in the chat that I think kind of explains those 16 states, and I think it's a pretty good, it goes a little bit deeper if you want to look into that.
got it. Okay, so we now know that these states have a voracious appetite for revenue. All you got to do is, read the news and you understand that the states don't necessarily have an accurate plan for funding their future liabilities. Come on, seriously, they just changed the rules, or they changed the math, or they changed the actuarial tables, but they themselves know that they have to raise revenue. So the states are playing catch up. So as advisors working with these customers, working with these business customers, what should we do? The first thing we have to do is really understand the revenue picture for the company. And I just laid out a few things here that are important for you to do, to know, and to recommend, and also develop for these business customers that you're working with. If you're doing accounting or bookkeeping, you may not need all these things, right, to do the financial statements, but you need it for sales and use tax. You gotta have it. And please read everything here because it's all pertinent to what states are looking for when you begin to meet the Wayfair threshold in that state.
Hey, Peter, quick question on that. On the one where it's delineated by county, do you know of a good lookup where you can put a zip code in and it'll kind of kick back down to the county?
Yeah, I do. I've done those things before. I've been able to identify state by state how to do a lookup. So I can send you the link to that, Rob.
That would be great because that would be hugely helpful because getting that level of detail can be that's probably 90% of the work.
Yeah, I just made myself a note and I'll get that to you, Rob. Thank you. Make sure too, by the way, that you have timely resale certificates. Each state, and I deal mostly with the state of California, each state provides their resellers to apply for and obtain a resale certificate. They provide them with a resale account number that the reseller uses when they're selling to other resellers. So in order to have that exemption on your sales and use tax, you have to be able to retain on your records a timely resale certificate before you ship the product to that ultimate reseller. I've worked with many auditors, and if you have an out-of-date resale certificate, or if it's not complete and accurate, they just throw those dollars into the section for late payment, meaning you end up having to pay the sales tax because you were not able to document that you have a timely resale certificate for that customer. Same thing for exempt customers. You don't need an exempt certification per se, but you have to know who the exempt customers are.
Is there like a program or a process that you're doing to kind of corral all those, or are you just manually doing it?
So what I do with my business customers is they're all on QBO. I mean, that's the only platform that I really work on now. I know there are many others, and I'm thinking about the potential for many others, but I definitely make sure that we designate in customer type what type of customer we're selling to. so that we have a record. We're able to segment the revenue, not just by the ship to destination, but all these other things too, the
That's
other
great.
aspects to it. Okay,
Great.
that's what I call blocking and tackling from an accounting perspective. Or as my old boss used to say, belt and suspenders. All right. Now, the world of automation has changed a lot too, right? There are many vendors that are out there now who will allow the business customer to utilize automation. And it's an excellent avenue to pursue. Because of what I'm saying here, in the last 4 years, 45 states have added Wayfair rulings, and they're also changing their rulings year by year because they want to lower the threshold for doing business in our state. It's obvious. It's obvious what the states need to do. So for us as accountants, unless we want to look up each state's, like, for instance, in the state of California, it's called the Department of Tax and Fee Administration. The Department of Tax and Fee Administration. Unless you want to look up that department's rulings month by month or quarter by quarter, I consider you think about using automation in your customer's revenue generation process. What I mean by that is using automation to collect the data that's needed at the time the product is ready to be shipped, so that we're able to properly calculate what the correct sales tax rate is, depending upon the taxability or non-taxability or resell or whatever the situation is with your customers. The Wayfair rulings are changing all the time. Tax rates are changing regularly. And then if you don't calculate these things correctly, the states will fine us. They will fine us. And I've seen that too. If you're really going to get into the space of multi-state advisory, and I recommend that you do, because not many financial people really want to get into this space. And as I mentioned at the beginning, this is the huge growth area, meaning the states are only beginning. They haven't even touched their salad yet. Once they get through their salad and start getting into the entree, this whole area is going to just hugely take off. And I'm not saying you have to become an expert in each of these areas, but I am saying that you need to understand the economy and what's going on with the economy so that we can all become better at this. We can all start to understand, oh, how should I be advising business customers on how they pay attention to things like this, and so that they understand. The most important thing we can do as financial advisors in the advisory capacity is so that people will understand. If they don't understand, they're only going to do it because they're afraid. That's not the reason to do it. The reason to do this work is so that people will begin to understand what's happening and why it's important.
Hey, Peter, I want to point something out. My entire family is kind of all accountants, and I've got one sister who's been doing bookkeeping for many years. My other sister just got started, just kind of was in a different industry, and then kind of moved over to accounting. And she kind of has specialized by crook, she just by happenstance really specialized in sales tax, and now she's got more business than she knows what to do with, and is getting paid at a higher wage than the person who's been doing regular bookkeeping for 20 years. So this is really a niche area where if you learn this, and you're going to have more work than you know what to do at a higher level and really set yourself apart. So I think this is a brilliant way to kind of, if you really want to distinguish yourself.
I couldn't agree with you more. I mean, these multi-state compliance, I call it compliance because we're having to train people how to comply with the law and follow the law and develop procedures inside the companies that will ensure consistent administration with the law. These engagements are not small dollars, because the downside, if you will, or upside, depending upon how you look at it, it's significant. It's material. It's material to almost every customer that you might want to work. All right, so I'm now listing some of the vendors that I've worked with. I've worked with all of these companies. I'm not going to go through each and every one of them, but there's reasons why you might want to enroll yourself as an accounting firm or as an accountant or as a tax advisor, as a bookkeeper in one or more of these firms who all have programs that allow you to get continuing education in the areas that I'm giving you insight into. I wouldn't recommend that you use Intuit's products exclusively. And I don't mean that to dig on them. I'm just saying that they have integrated sales tax compliance into QBO. And it's better, it's much more complete and comprehensive if you use a sales tax vendor that integrates with your accounting system and they capture all this information on the front end. Intuit probably will catch up at some point. They may end up buying one of these vendors. I thought for a long time that they were going to acquire Avalara. They opted not to. And they're trying to do what their business model is they look at the vendors that are around them. They try to mimic what the vendors are doing by building software that has the same or similar functionality, and they integrate it into QBO.
Hey, Peter, I put a link in there. I think TaxJar has got a great state-by-state resource.
Yeah,
That's simple, and you just click on the state and gives you a lot of information. So I put that link in there because I've found that to be extremely helpful.
yeah, that's the point that I made. The exact same point. Their partner program is one that I think people should look at. Not to mention that, not to say that the others are not. They're all good. They're all good. But if you're going to get into space, you really have to become your appetite for learning how to apply these rules and advising your customers. You got to become hugely interested in this field. You don't have to be an expert. It took me many years to become expert at this. Here, I'm just going to talk quickly about the streamlined sales tax. This is an organization, nonprofit organization that guides companies who want to standardize their registration. So if you're going to avail yourself of your own sales and use tax knowledge inside your company and possibly not work with one of the third-party vendors, you can definitely learn a lot about standardizing process. You see in my points here that you can save a lot of time through having one form to register for sales tax across the country. And they also provide a lot of guidance too. Streamlined sales tax organization, very solid.
Hey, Peter, somebody asked the question if TaxJar was defunct. I answered it that it wasn't. They just got purchased by Stripe. Is that correct?
That's correct.
Okay.
Yeah, we'll have to follow that one, right? Because obviously Stripe wants to build, they want to integrate that technology into their merchant processing system.
Yeah.
Sorry.
Yeah, go ahead. Sorry. Keep going.
Another important constituent is Multi-State Tax Commission. This is the governmental agency So they're basically trying to keep up with all the changes that are going on in all these different states who are implementing their own rulings and compliance with respect to Wayfair. Multi-state tax commission is a very important tool because it provides more guidance with respect to multi-state. All right. So now I'm just going to we're coming to the end of our time here. I don't know how much time we have. Yeah, we're at 11:40. So yeah, we're close to the end of time. But there's some important points here that I'm sharing with you. And it has to do with what I said earlier. Once you get started with sales and use tax, once you begin filing, these states now send, and I've seen it, they send out detailed nexus questionnaires to the same companies that are trying to comply with the law. And the purpose of the nexus questionnaire is to capture the company into an area of the law that would enable the state to tax them on income tax basis. Let me say that again. Once you begin filing a sales and use tax, once you're starting to hit some of the more significant dollars, for instance, in California, I'm pretty sure that once your in-state revenues exceed $1 million, they're going to want you to begin filing non-resident income tax returns, Form 100, which is the corporate income tax return, non-resident, and pay California their share of that $1 million. It's unbelievable because typically what the company would do is they would recognize all of that revenue in their home state because they have no business relationship with California. They don't have an office there. They don't have a bank account there. They don't have a registered agent there. They don't have none of those things. But California is becoming very aggressive at this. It's truly unbelievable. I have copies of some of the multi-page Nexus questionnaires which get into this. If anyone would like to see them, just send me an email. It's on the last slide. As you get into this area of the law, you begin to represent these companies and directing their responses to the questionnaires. This is where a lot of us can really gain exposure and become expert by representing these companies when they respond to the states. This is going to become a very important part of it. All right. In summary, in summary, this is an area of I call it consulting. You know, when people go into accounting, they're told, are you going to be a tax person or are you going to be an accountant? Are you a CPA or are you a bookkeeper? You know, this is kind of nonsense in my estimation. If you're going to become an advisor to business customers, you have to really know what your strong suit is. It doesn't have to be everything or even most things, but you really have to know what is it that you're going to hang your hat on. In this area of multi-state tax, this is what I do. I don't really do accounting anymore. I do multi-state tax because I believe this is where the economy is going, meaning the way that states are going to start interacting with companies who are doing business in their state. Point two, if you're going to become an expert in this area, you have to guide your clients how to establish and administer procedures to proactively conform to these regulations and to develop strong and persuasive arguments to counteract. So yeah, there's so many opportunities here. I hope this has been helpful to you folks. Here, finally, I think on the last slide is my information, my company, my phone number, my email. If you want to reach out to me or you want to ask questions, or have a conversation about multi-state tax, I'm happy to do that. So that's it. Thank you, Rob.
No, Peter, yeah, thank you very much. This is definitely an area that is in a growth mode. Not a lot of people are getting involved and they don't want to get involved. It's amazing how many accountants just don't want to touch this. And if you can just even learn a little bit, I mean, my sister, just to kind of use her as my personal experience, she doesn't have a ton of experience, but she already knows so much more than other people. And because of her experience in dealing with all these other states, she works for a company that's been buying companies left and right. And they've now brought her in when they're negotiating it to make sure. I mean, she's got involved in some of the higher level negotiations because of her experience in dealing with these other states and the problems that it presents. So even though she's got, she's only been doing accounting for a couple of years, she's really taken off. And this is an area where it's wide open, and I think everybody's got a great future. It's like you think about Back to the Future, where we're going, there are no roads. I mean, it's just the sky's the limit if you want to do this.
It's amazing. We are really just getting started. We really are.
There's another question. Does Peter partner with advisory firms that do not want to do sales tax? So do you partner with other people that don't want to do it? Do you know of anybody that will work with other firms that don't want to do it, where they can just kind of hand it off, kind of like a payroll company? I'm assuming that's what you mean.
Yeah, I mean, definitely it's not everyone's cup of tea, right? I happen to love it because I think it's where the economy is going. I see the future. I'm already planning on this becoming a huge area for us as accounting professionals.
Yeah, no, and I think that's basically what it's going to be is one, recognizing that there are issues, and then either educating yourself to deal with it, or kind of like payroll, hand it off to somebody else so that you don't have to mess with it.
Correct.
Yep.
Okay. Thank you all.
Okay, Peter, thanks a lot. You have a good day.
Thanks, Rob.
Yep. Bye.
Talk soon.